Hello money makers. Welcome to today's top 5 market updates. Our first update today is from Japanese venture capital giant SoftBank. CEO says equity value back at pre-virus levels. SoftBank Group Corp chief executive Masayoshi Son said on Thursday the equity value of the group's holdings has recovered to pre-coronavirus outbreak levels, in a defense of his investing reputation after the group was hammered by losses. The rise in corporate value was driven by the growth of SoftBank's stake in Chinese e-commerce giant Alibaba Group Holding Ltd and following the successful merger of its U.S. wireless unit with T-Mobile US Inc. SoftBank has undertaken a complex transaction to divest part of its T-Mobile US stake to raise $20 billion. That brings the total from its asset sale program, which includes monetization of stakes in Alibaba and wireless carrier SoftBank Corp, to $35 billion or 80% of the planned total, Son said. Those funds are being allocated to share buybacks and to increase SoftBank's financial leeway. Our next update is from the IMF, which is predicting a deep global recession. The coronavirus pandemic has caused wider and deeper damage to economic activity than first thought, the International Monetary Fund said on Wednesday, prompting the institution to slash its 2020 global output forecasts further. The IMF said it now expects 2020 global output to shrink by 4.9%, compared with a 3.0% contraction predicted in April, when it used data available as widespread business lockdowns were just getting into full swing. A recovery in 2021 also will be weaker, with global growth forecast at 5.4% for the year compared to 5.8% in the April forecast. The fund said, however, that a major new outbreak in 2021 could shrink the year's growth to a barely perceptible 0.5%. Although many economies have begun to reopen, the fund said that the unique characteristics of lockdowns and social distancing have conspired to hit both investment and consumption. Next up we have some earnings news with Darden and Nike reporting results today. Darden Restaurants Inc., which owns the Olive Garden and Longhorn Steakhouse chains, is scheduled to report fiscal fourth quarter earnings on Thursday before the opening bell. It's already a bleak outlook, with analysts looking for a loss of $1.71 a share on revenue of $1.2 billion. Meanwhile, sports apparel maker Nike Inc. is set to report fourth quarter earnings after the closing bell, and analysts are expecting earnings of 12 cents a share on revenue of $7.4 billion. In major economic news today, weekly, jobless claims data will be out at 8:30 a.m. Eastern Standard Time. Thursday's trading day will be keenly observed by investors as the government will report its weekly unemployment numbers. The progress has been good, but unemployment is still at post-World War II highs. Initial jobless claims for the week ending June 21 are expected to be 1.3 million, while continuing jobless claims are expected to be 19.9 million. Both would be down from the number of claims filed the prior week. Our final update is from the energy markets, where oil prices are slipping again. Oil prices slipped on Thursday, extending losses of more than 5% in the previous session, weighed down by record-high U.S. crude inventories and worries that a rapid resurgence in COVID-19 cases could choke a revival in fuel demand. Wednesday's sell-off came after U.S. government data showed crude stockpiles rose by 1.4 million barrels, driving inventories to a record high for a third straight week last week. Analysts said that this was mostly due to a flotilla of Saudi cargoes booked by U.S. refiners when prices slumped in March. Those shipments are due to ease soon. Worries about a second wave of COVID-19 cases in several U.S. states, where lockdowns had eased, and a rapid spread of infections in South America and South Asia are expected to keep a lid on fuel demand. Thank you for watching. Subscribe for regular updates. Only on Capital Street FX.